The Chinese luxury industry has traveled an extraordinary path in just a few decades, rising from a marginal position in the global hierarchy to a place where its consumers, platforms, and cultural conversations set the tempo for the entire sector. At the end of the 20th century, most prestige labels treated China as a future opportunity rather than a present reality. Today, they calibrate product launches, pricing calendars, and even creative direction around the preferences of mainland shoppers. The journey to that point is full of significant turning points, each one adding another layer of complexity that now defines a mature, if still fast-moving market. When Deng Xiaoping's market reforms began to transform urban life in the 1980s and 1990s, disposable income climbed quickly, but true discretionary spending remained limited. Early luxury purchases often took the form of imported cigarettes or small leather accessories carried home by relatives who had traveled abroad. Standalone boutiques were rare and tended to be tucked inside five-star hotels that catered to expatriates. Yet the seeds of aspiration were already germinating. Business travelers started to notice Vuitton monograms at airport duty-free counters, and returning students described the cachet of European fashion capitals. These vicarious experiences, even when second-hand, helped to build a mental link between luxury logos and modern success. The Beijing Olympics in 2008 signaled a new era. Global media coverage drew attention to China's rapid modernization, and rising public self-confidence encouraged consumers to express achievement in material form. Corporate entertaining and government-related gifting channeled significant budgets into watches, rare spirits, and branded writing instruments. At the height of that boom, entire store floors in Beijing malls were booked for private gift exchanges that often ended with a single swipe of the company card. Expansion was swift and sometimes undisciplined. By the early 2010s, premier labels had opened hundreds of stores across Tier 1 and Tier 2 cities, believing that demand would keep compounding without limit. In late 2012, the National Anti-Corruption Campaign disrupted that momentum. Severe restrictions on ostentatious public gifting suddenly made it unacceptable to hand over a designer briefcase in full view of colleagues. Many observers predicted a prolonged slump. Instead, the market pivoted. Purchases shifted from transactional gifts to personal indulgence, emphasizing emotional connection and individual taste. A younger cohort, less interested in showy status signals, began to explore fashion, beauty, and jewelry as avenues of self-expression. This generational handoff changed the vocabulary of advertising. Campaigns that once featured imposing boardroom personas gave way to lighter narratives built around lifestyle and creativity. Around the same time, a second turning point unfolded in the form of domestic repatriation of spending. Exchange rate movements, targeted tariff cuts, and the gradual rollout of duty-free incentives on the island of Hainan narrowed price gaps between mainland boutiques and overseas flagships. Chinese consumers who had previously filled suitcases in Paris or Hong Kong found fewer reasons to wait until their next trip. Simultaneously, digital leaders such as Tmall and JD built enclosed luxury sections with authentication guarantees, making it safe to click buy from a smartphone rather than rely on parallel importers. The result was a structural shift toward onshore consumption, just as the customer base itself was maturing. The global pandemic delivered the third major inflection. With borders mostly closed in 2020 and 2021, affluent households redirected travel budgets into domestic leisure and shopping. Brands reported double-digit comparable growth on the mainland, even as their boutiques elsewhere remained shuttered. New city clusters like Chengdu and Chongqing experienced first-wave luxury openings, giving residents local access that had previously required a flight to Shanghai. Cash-rich consumers experimented with categories they had never considered, from niche fragrances to haute couture wedding gowns. That burst of demand helped many houses recover lost global revenue, but it also created an illusion of limitless elasticity. When travel resumed in 2023, the tailwind faded quickly. By 2024, mainland sales declined in real terms, and even premium consumers began to weigh purchases more carefully. Macroeconomic headwinds intensified the reckoning. Property prices, a key pillar of household wealth, plateaued or fell in several large cities, delivering a psychological shock that encouraged caution. At the same time, university graduates confronted a soft labor market, and wage growth in service industries lagged historical averages. Luxury demand did not collapse, but the easy assumption that each new year would deliver another surge proved unreliable. Brands that had counted on price increases to cover rising raw material costs discovered diminishing returns. Customers became more attuned to value for money, a mindset shift that echoes the broader national conversation about pragmatic living. Digital infrastructure remains the most distinctive feature of the Chinese market. Super apps combine messaging, payments, social feeds, and shopping into a single interface, compressing the traditional purchase funnel from days to seconds. A consumer scrolling through short-form video on Douyin can encounter a 30-second film clip of a new handbag, tap through to an interactive virtual try-on, and complete payment with facial recognition authentication almost instantly. The same technological scaffold enables live stream selling, in which brand hosts or independent key opinion leaders present a product stack while comments, likes, and questions stream in real time. Conversion can outstrip traditional e-commerce by an order of magnitude, but any mishap is equally amplified. A host mispronouncing a product name or accidentally revealing a lower international price can ignite a social media backlash within minutes. Behind the user interface lies a vast data engine. Scroll velocity, dwell time, and click paths feed machine learning models that determine what item appears next on a feed. Brands renting space on the platform benefit from rapid consumer insight, but do not fully own that data. This asymmetry has led many houses to invest in so-called private domain traffic, directing loyal customers to mini programs or membership clubs where transaction data and personal preferences remain within the brand ecosystem. By analyzing redemption rates on birthday coupons or the open rates of personalized style advice, managers can model lifetime value and allocate scarce inventory to the most profitable client segments. Demographic change amplifies these behavioral shifts. Millennials and members of Generation Z already comprise the vast majority of mainland luxury shoppers, and their outlook differs markedly from the priorities that dominated the early 2000s. A visible logo is not strictly avoided, but novelty, storytelling, and ethical alignment carry greater weight. The second-hand market, once stigmatized by fears of counterfeiting, has become mainstream among younger buyers who appreciate both circular sustainability and the pleasure of hunting a discontinued colorway. Resale platforms employ certified gemologists and watchmakers to guarantee authenticity, further legitimizing the channel. Some brands have responded by launching official refurbishment services that extend the life of iconic pieces and keep them within the controlled ecosystem. Chinese cultural confidence has given rise to the Guochao movement, often translated as national trend. Instead of referencing European aristocratic motifs, designers draw on traditional opera, ancient poetry, and regional crafts such as Suzhou embroidery or cloisonné enamel. An international maison that once simply inserted a dragon motif into a capsule collection now collaborates with local artisans, funds museum exhibitions on Bronze Age bronzeware, or stages immersive shows along the Suzhou Creek. The payoff is credibility, with consumers who can distinguish between superficial decoration and genuine respect for heritage. At the same time, domestic labels are ascending on the world stage. Runways in Paris now feature collections from Shangxia, Icicle, and Shiatsi-chun, each bringing a distinctly Chinese aesthetic vocabulary to global audiences. Success abroad feeds back into domestic demand, reinforcing a virtuous circle of validation. Category performance has become increasingly uneven. Watches and jewelry retain a perception of long-term value, appealing to risk-averse buyers. In jewelry, the demand for colored gemstones and bespoke design remains strong, bolstered by the cultural significance of birthstones and anniversary symbolism. The watch segment contends with price volatility in the secondary market, but craftsmanship-driven narratives around high complications and heritage workshops help stabilize demand among collectors. Leather goods face saturation and logo fatigue, especially in Tier 1 cities where monogram repetition is omnipresent. Brands respond with micro bags, exotic leathers produced in limited numbers, and artisanal personalization, such as hand-painted initials or strap weaving. Footwear enjoys structural momentum as casual office codes and hybrid sneakers blur the line between streetwear and luxury. Beauty is the quiet outperformer. Skincare houses leverage domestic biotech research to address concerns like pollution-induced sensitivity or blue light exposure, formulating serums with traditional medicinal herbs combined with peptide complexes. Fragrance brands explore indigenous notes such as osmanthus and incense cedar, tapping into olfactory memory while offering something that feels uniquely Chinese. Online diagnostic tools employ augmented reality to simulate product application, reducing friction for first-time customers and supporting higher price points through personalized regimens. Sustainability has progressed from optional marketing to operational necessity. National policy envisions carbon neutrality by mid-century, and draft disclosure rules encourage large enterprises to publish measurable targets. Many luxury groups now track greenhouse gas emissions across scope categories, shifting warehouse lighting to renewable power and piloting regenerative agriculture for cotton supply. Transparency around labor standards is equally important. Workshops that produce limited edition haute couture pieces invite journalists and students to observe, underscoring a commitment to skilled employment and cultural preservation. Channel strategy has diversified. For years, Tier 1 cities such as Shanghai and Beijing captured most store openings. Today, the frontier lies in provincial capitals and emerging megalopolises. Chengdu, known for its relaxed tea house culture, now boasts luxury malls hosting global flagships with experiential lounges overlooking the Jin River. Xi'an, historically famous for the terracotta warriors, attracts wealthy parents from neighboring provinces who combine weekend tourism with shopping sprees. Developers court brands with favorable lease terms, advanced analytics that track anonymous customer flows, and integrated omnichannel logistics capable of same-day delivery. Travel retail remains significant. The duty-free regime on Hainan Island allows domestic tourists to purchase luxury items at favorable prices up to an annual quota. Although average basket size softened in 2024 as budgets tightened, footfall continues to rise, illustrating enduring appetite when price hurdles are lowered. Internationally, evolving visa policies redirect flows toward destinations such as Bangkok, Dubai, and Milan. Brands must orchestrate consistent pricing and product availability across these nodes to preserve equity and avoid arbitrage opportunities for parallel traders. Operational priorities have shifted now that growth is steadier and more competitive. Clienteling, once a soft skill, is becoming a data-driven science. Relationship managers armed with mobile dashboards monitor purchase history, product preferences, and event attendance in real time. A discreet reminder about a spouse's birthday or an invitation to a private trunk show can turn occasional shoppers into brand evangelists. Pricing architecture also requires finer calibration. In the past, many houses simply raised tags annually. With a more value-conscious consumer base and social media transparency, price hikes must be tied to clear quality improvements such as upgraded hardware, more sustainable materials, or expanded after-sale services. Talent development underpins every other lever. The era of relying on expatriate boutique managers is ending. Chinese professionals with international education and local cultural fluency now lead store networks, merchandising, and communications. Brands invest in local design schools, sponsor pattern-making apprenticeships, and partner with artisanal workshops to build a pipeline of skilled labor capable of delivering couture-level craftsmanship within the country. This emphasis supports the broader national agenda to move up the manufacturing value chain while preserving intangible cultural heritage. Risks remain. Geopolitical tensions could introduce punitive tariffs on European luxury goods, compressing margins and forcing difficult choices about price gaps versus profitability. Cybersecurity incidents pose reputational threats in a market that prizes trust. Climate volatility, evidenced by record flooding in the Pearl River Delta and heat waves in northern provinces, disrupts logistics and raw material supply. Brands mitigate these risks through diversified sourcing, stronger contingency planning, and investment in resilient fulfillment networks. Outlook consensus suggests that Chinese consumers will continue to account for roughly 1/3 to 2/5 of global luxury expenditure by the end of the decade. Growth is expected to proceed at mid-single-digit rates rather than the double-digit surges of the previous cycle. But the absolute incremental spending still represents a powerful driver for worldwide results. Brands able to synchronize product development, cultural narrative, and digital innovation stand to capture disproportionate share. To succeed, luxury houses must weave together three disciplines. They must tell stories that resonate at the speed of social media without compromising timeless brand codes. They must embed measurable sustainability across the value chain, treating carbon reduction and circularity as pathways to operational excellence rather than compliance chores. Finally, they must engage with Chinese culture in a way that moves beyond decorative references and toward genuine collaboration with artists, scholars, and communities. When those elements align, luxury transcends its origins as a marker of status and becomes a conversation about mastery, meaning, and modern identity. The Chinese luxury sector has left behind the era of automatic expansion and entered a period defined by nuance, resilience, and reciprocal influence with the broader society it serves. Its future rewards will belong to those who approach the market not as a frontier to be conquered, but as a dialogue to be conducted with curiosity, respect, and enduring commitment.